Hi, my name is Steve Houston. Welcome to this channel. On this channel, we talk about mortgage protection and final expense, really all things financial services, annuities, IULs. We talk about the different IMOs, and some are good, some are bad. And we provide the facts, and we allow you to decide what's in your best interest going forward, as usual. This week, I'm going to talk about the in-home presentation and give you really an in-home presentation script outline. Before I move on to step number 4, though, which is explaining your role and purpose, I want to kind of go back for a second because I forgot to kind of add some things there, which I think is important. While you're getting you're going through the reason why they filled out the form, you can turn that lead sheet over and use the back of the paper to write down their answers. Because again, this means that you're taking concern. You're interested in their answers, right? They're not just flipping answers and you're wasting their time. These are things that you're going to later use in your presentation and that you need in order to give them their options that they're looking for. That's ultimately what they're looking for. So turn your lead sheet over and go back and ask that, when she says, when you ask that question, you know, who filled this out, write down who it was and what she says, right? So when you ask them why they filled the form out, really, it's, you know, you're trying to find out what they want the protection to do for them, right? That's the ultimate question that you're trying to find out, and that's what you want them to vocalize to each other, right? Again, write that down the back of the sheet, but this time you want to shut up and listen. Sometimes we talk too much in the process, and we don't allow them to expand on their answers. By allowing them to expand on the answers, you're going to need things. You're going to have things that you need later on in order to close that sale. So allow them to ask the questions, shut up and listen, and allow them to expand on their answers, right? So this is where you want to give them a chance to talk about those fears, like I said, when they're answering those questions, but write it down because you may later refer back to that if you get to think about an objection or whatever objection that you get, right? It's also a time to gather their emotional hot buttons and write those things down because you may very well, again, use them towards the end of your presentation. Look, people, again, like I said, buy out of emotion, and this is where you want to bring them. You want to bring them to the point of when they made that emotional decision. And again, the more you drill down and the more you allow them to talk about it, the more you uncover the real reason. The old saying is the fire is the hottest at the coals. It's true. You know, you don't want a surface reason. You really want to know the real reason, which is most likely that if something happens to one of the partners, they feel like they're going to be left alone and out of a home. And the more you can expand on that, the better off you're going to be, and you put them again in that frame of mind that they need to be in. That's part of our job as agents, is being willing to have that conversation. Right, they filled the form out and they sent it in. Repeat back to them exactly what they're telling you. So if she says, you know, if Jack were to pass away, I'm afraid that we couldn't afford a home. So Jill, if I understand you correctly, the reason why you filled the form out was you wanted to make sure that if something were to happen to Jack, that you have options and you and the kids aren't moving in with the relatives. Is that right? Right? And so I kind of say that back to them a little bit without being redundant. There is some redundancy in it, obviously, but I want her to hear it, right, and him too as well. So I want to kind of go back a little bit and cover that with you because I think it's important in step number 3 of your in-home presentation. Okay, so let's move on to step number 4, which again is explain the role and purpose. So let me explain to you kind of how I do that. Let me explain my role here, Jack and Jill. I'm a field underwriter, which basically means I'm going to be able to show you some options, and when we find an option that you feel most comfortable with, it fits your needs and your budget, I'm going to help you apply for that coverage. Why don't I say that I'm going to help you fill out the application? Because we're making it, you know, this is an applying decision tonight. I can't guarantee them, although I've done my due diligence and my research, that they're going to be covered. I am a field underwriter, but I'm not the sole underwriter, right? So I'm going to help them apply for the coverage. It kind of separates me from being a salesman, right? I'm a field underwriter. I'm here to help you find the options and to help you apply for the coverage. I'm also a broker, and which means that I represent many of the top-rated companies, such as Mutual Omaha, Transamerica, AIG. You know, throw out some names that they probably most likely will recognize. You can bet that they recognize with Mutual Omaha if that's one of your carriers, right? What that means to you, Jack and Jill, is my job is to find you the best coverage that you're going to qualify for at the best price. You know, I'm able to match your needs, your budget with the best price. Unlike most agents, and here's what I say, I kind of approach things a little bit differently. As a broker, I'm able to, again, take your needs and your budget and your medical conditions and get you the best price. When most agents come into a situation like this, they have one set of numbers in mind, which are the products they're able to sell with that particular employer. I represent a couple dozen different companies, so I can again match your needs, your budget, your medical conditions, and get your best price, whereas they try to squeeze you into that box because they have no other options, right? So that's kind of how I say it. And I'd also say, especially today with the living benefits explosion that we have going on in the marketplace, if you're able to represent companies that have living benefits, this is the time to kind of throw that in there. Now, Jack and Jill, let me be clear, this is not the old kind of mortgage protection insurance. And what I mean by that is your bank or your lender will not be the beneficiary. Jill, Jack, if something happens to you, I'm going to be bringing a check and giving it to Jill and the kids, right? Or whoever your beneficiary is going to be in the event maybe you both passed away at the same time. This is not decreasing term insurance, which is a horrific investment. In other words, if something happens to you tomorrow or 10 years from now, your death benefit will stay the same, right? The policy is also portable, which means that if you refinance or you remodel, you put a pool in, new driveway, whatever it is, the coverage stays the same and you do not lose it like you do with those other coverages, right? It's not tied to your mortgage, which is very important, Jack and Jill, because that type of coverage, if you do refinance because you put a pool in, whether you can afford it or not, you lose the coverage. Okay, so let's move on to step number 5, which is the think about it objection. So basically in this process, we're trying to eliminate the think about it objection. So what I do when I'm going into the home is I have a worksheet with my 3 or 4 options on it, and I start out by saying, so as I move into the options, I'm going to tell them, Jack and Jill, I'm going to show you some options. I'm going to tell you kind of what I was thinking about and where I came up with these numbers. And I'm going to start off with full coverage for both of you, Jack and Jill. Not because I'm trying to get you to spend any more money, but I do want to go ahead and provide you full coverage that you qualify for. And then we're going to discuss some other options as well. Fair enough? And I pull my worksheet out and I explain the options and the benefits. Typically speaking, I'm going to start out with a term product, 15, 20, and 30 years, if they qualify for it. And I'm going to offer return of premium if I'm able to do that, and go from there, right? And then I'm going to explain the benefits of each policy. I'm going to offer the same policy for her and for him, because in mortgage protection, they want to both be covered in most cases. And step number 6 is show the options. And these kind of go together, right? So as I've rolled out the rates on my worksheet, I'm going to show them the options, and which is typically 15, 20, and 30 years for him, her. Maybe it's full coverage, partial coverage, or maybe something even smaller than that, because again, going in the door, we don't know what their budget is, and I don't ask them what their budget is on the phone either, because I'm coming out there to show them some options, right? And then typically speaking, if you're going to give them 3 options on a worksheet, which is, let's just say this is him, her, and let's just say that their mortgage is $300,000. I'm going to go in there with $300,000 of the coverage, 15, 20, and 30 years, typically speaking, right? With a term product with a disability maybe attached to it as well, maybe some living benefits, whatever. And I'm going to do $300,000 for him and her. Again, this depends on what their age is, because if they're 50 years or above, you're not going to be able to get 30 years. So you go in there with 15 and 20, or 10, 15, and 20. Then you might want to do a $200,000 option, and then maybe a $75,000 option, right? And so in this, I'm going to, again, same thing, 15, 20, and 30, right? And that way, they're able to find something that may fit their budget, and I'm going to go over with them full coverage, partial coverage, and even something less than partial coverage, because some coverage is better than no coverage at all, right? And some people go in there with a universal life, or they'll go in with a smart UL, or whatever it is, and not go in there with term products. But that's kind of how I start out my presentation, right? So the next thing is, okay, so the next thing we're going to talk about is step number 7, which is closing the sale, right? Or closing using the application. Very important. Closing using the application. Now, okay, before I go on to closing the application, I want to go back for a second, because something just came in my mind. Is, again, this is a conversation that you're having with these folks, and you want to continue to kind of, it's like think of it as like a combination lock. You turn in the dials trying to match medical conditions, age, budget, until you find that magic number. This is not where sales is. This is where your like, know, and trust, your bonding is really going to come into play, because they need to understand that you're really there to help them. And you're willing to kind of go with the flow and figure out something that works for their budget, not making them feel bad if they can't afford full coverage, right? So I wanted to bring that up before we moved on. So again, step number 7, closing the sale using the application. Once you've found the right product, the right price, you're ready to close. And I use the word close loosely, because I don't think we close. Remember, it's an emotional sale. We're not car salespeople. No disrespect to car salespeople, but it's not really a high pressure situation. At least not the way I do it. Now, there are people out there that get thrown out of homes. That's not my style. So when they finally figure out what they want, typically speaking, they're going to go right down the middle, because people can't make a decision. I usually circle it and I say, okay, Jack and Jill, congratulations. That's a good choice. That's exactly what I'd have done had I been in your situation. It's a like, know, and trust, right? And it's also feel, felt, and found. I think that's a very good option. When I first got my coverage for my family, I also started out with partial coverage. Make them feel good about the fact if they can't afford full coverage, it's okay. Some coverage is better than no coverage at all. Now I'm going to share a tip with you real quick here that I use in the home quite a bit. And that is that once I start moving the application, that's my first soft close, so to speak. I tell them that I'm going to fill out an application. I'm going to ask some health questions. If at any moment after I show them the rates and I start moving into that close, they start to balk. You can kind of feel that they're just not totally sold out. So here's my moment of truth. Once you start moving into the application, if you can feel any uneasiness, or they're not totally sold out, or they start to throw an objection out, stop them by doing this. As soon as I sense any kind of balking, I'm going to put my hands up. Here it goes. Okay? Now, Jack and Jill, let me explain to you what happens next. Once you decide on a product and a budget that fits your needs, I'm going to help you apply for the coverage by taking an application. I'm going to get a voided check. I can't cash a voided check. It's simply to set the banking relationship up between you and the insurance company, so that when they approve you for this coverage at what we discussed tonight, the face amount and the premium, I'm going to get a policy. They're going to issue a policy. I'm going to come out here and go over that policy with you, and then upon your acceptance, they're going to draft the first month's premium. Now, here's what's important. During that time, when I leave tonight, as long as you sign the application and give me that voided check and we fill it out, you're covered. So, Jack, if you go out tonight, get some milk at the store, go to the grocery store, go to work tomorrow morning, you get hit by a truck or you die of a heart attack, Jill and the kids are no longer at risk. They're covered even though you haven't spent a single cent. It's basically free coverage for you until the policy is issued based on the options that you chose tonight. Fair enough? Who can argue with such a powerful benefit? And that's what I use in my soft close. Okay, that's a tip for you. I hope you enjoyed that. Now the next thing you want to do is you want to secure the sale.